Okay, let me just check, folks, if we are online, or at least if we're streaming, and then we'll get started. Okay, I guess this is working. Okay, all right, guys, so welcome to Monday. Um, it's a holiday hit trading day, apparently. I was just checking the calendar, and yeah, what did I see? I find that Europe, for the most part, is closed, but UK is open, and of course, UK is actually the biggest foreign exchange trading center. So we can still expect some action for today. Now, what do we have from what else do we have from the calendar today? Nothing very important, which means that we will stick to charts, we will stick to patterns to figure out what we should be doing. Now, speaking of charts and patterns, let me just open our MetaTrader platform. I use MetaTrader if I want to see a broad view of the market. So what do we have for today? It looks like the dollar is losing ground across the board. Now, why is this? Part of me thinks that it's not about data, but it's about what's going on in California, in LA. So you've got that violence happening right now. I mean, when you talk about US and violence, I think it's something that is pretty normal for many people to imagine, I think. But what are we seeing here? We have immigrant communities fighting back against the raids that President Trump's ICE is doing. Okay, so your I actually forgot what ICE means. I think it's Immigration and Customs Enforcement. Anyway, these guys have been raiding immigrant communities. They've been deporting people, but now we're seeing some pushback from these communities, especially in LA. Okay, and that pushback has led to violence. You've got the National Guard out, and that kind of public disorder is not good for a currency. And that's one of the reasons why we are seeing a broad-based, I won't really say dollar dumping, because although the dollar is weak, it's not like there's been a big move already. Okay, so yeah, we've got broad-based dollar weakness. Like I said, I'm not going to use the term dumping at this point because it's been limited so far. Now, having said that, let's move on to individual charts and see what we can do at this point. So let me start with your euro. Let me clean up the chart in euro. All right, so what do I have for you from euro? We actually have, what do we see? We're actually pushing up at the moment. We never really pulled back to our trend line last week. Okay, we tried to, didn't quite get there. We are maintaining a pattern of higher lows and higher highs. Although this thing is still, I would say, you haven't really seen a new high yet for this big swing. So we're still in the process of establishing that right now. All right, let me just put in some indicators, try to figure out the numbers involved. So what's our ATR? Average true range for Euro is about 93 pips. And today's range, we have highs at 1429, lows at 1390. So we only have around 49 pips or 39 pips of price action. And what we're trying to say is we have room to maneuver in our current bounce. We're actually long in Euro already. I was counting on the idea that, okay, you've had a pullback 30 to 61.85, and you have all that violence going on in the US right now. My thinking is we will be testing the highs from Thursday. For today, at least get me to last Friday's highs. If we work with average ranges, then we should be talking about maybe getting all the way up to the 1483 region. So there is room for maneuver. We got in at about 1423. All right, so is this something that people can still chase? Your ratio at this point would be 1:1, almost 1:1, given your upside potential. But I would still say yes, it is a risk that would still be worth it. Stop losses ideally below the lows at 1390, but you can use a stop loss below 1408, your 61.85 retracement for the swing from Wednesday to Thursday last week. So we are bullish on this. We tend to think that the market right now is fueled by the violence that's going on in the US. Now, of course, Friday, we actually saw some impressive numbers from the US. That's why when you look at your charts on a daily scale, you have those big black bodies from Friday in your Euro, in your GBP, even in gold. But that was Friday. And the market is always concerned about what is next. The fact that you had good jobs data from Friday does not mean that all of a sudden the trend lines, okay, the trends have changed. All right, so we are bullish again in Euro. We're still in a price level that we could consider going long. Stop losses below 61.85, below your 1408 area. But let's now move on to gold, because gold is bouncing off the 21 EMA. All right. Now, gold bouncing off the 21 EMA. If we look at our charts, how significant that is, how has the 21 EMA hold? Well, it's held rather well throughout the year so far. You had brief periods in time when the prices were below that EMA line, but never really saw a reversal of the year's trend thus far. So sure, we are bullish. The big question for me is it still something that I can jump into right now, counting on that bounce from the exponential moving average, or is there no more room for us to go to? So again, we start by putting some ATRs in our chart, try to figure out what's the usual range. So gold moves about $68 a day. $68. Let's see what the high and low for gold is. High is at 33.23, low is at 32.93. So we're talking about half of your range. Uh, we're talking about having seen half of your average daily range, which means that we have room to maneuver in our gold charts. Okay, so room to maneuver, nice bounce off point, your 21 EMA. Just how high can we get? Well, let's take a look at this. Let me just do these first. Okay, so this is the high for gold from last what's this? Last Thursday, about 3403. Alrighty, let me zoom in. Let me go intraday. So low is at 32.93. Average range would suggest that you can get to about 33.50. We are at 33.22, so there's room to maneuver. If we go intraday, what are we seeing? Well, it looks like we're trying to take out the 21 EMA. If we look at our price chart, that 21 EMA has been repeatedly crisscrossed by gold, so sure, nothing to be worried about. Ideally, you should have gotten in. We should have gotten in gold earlier. Ideal entry was when you have this piercing pattern here in your candlestick charts. It's always nice to look for mean reversion when there's a big space between your moving average and your prices, and your charts give you an excuse for a pullback. Your charts signal that, or your candlesticks signal that, hey, this thing is going to turn around, this thing is going to do mean reversion already. So the combinations there. Is it too late to join? Like we said, this exponential moving average hasn't really acted as a good support or resistance level. It's been violated repeatedly in the hourly level, so I'm not too concerned about being at that EMA line right now. So what are our immediate targets here? If we look at our chart, we can define a consolidation floor in the intraday charts here around 33.39. Then, as we said, ultimately we would like to get to 34.03, your high from Wednesday. Other price points. You can have this high from Friday around your 33.57 level. Now, we said that the ATR for gold is $68. So if we are to look at the ranges only, from a low of 32.93, we should be talking about, again, getting towards that 33.60 area. So there's room to maneuver. There's an ongoing move up. Well, we're only a minute away, or less than a minute away, from the actual Open of London. So if you want to just see how the whole market reacts to the Open of London, then yeah, you give it a minute. But looking at these charts, we are bullish, and we think that it's something that people should be jumping into right now. Now, there are, of course, people who argue that with liquidity, you end up being blocked in your rallies or bouncing off in your sell-offs. They're right. But again, what we have here is a market that I think right now is driven by fear over what's going on in the US. Okay, domestic politics seems to be the main issue right now. Okay, where else should we be going? Let's take a look at our GBP, folks. Well, let me take a look at the charts first. Dollar CAD would have been nice on the daily level, but we do have the goal, or we do have US issues. I was thinking, if I look at that dollar CAD chart, okay, let me just clean it up. I was thinking, if we look at this chart, we have this nice dragonfly doji here. We should be thinking in terms of going all the way up to your 21-day EMA. But right now we are fundamental driven, we are sentiment driven, and that sentiment isn't exactly good for the US dollar. So what should we be doing? Well, let's assess. If we can't have an immediate rally, can we see a pullback and then resumption of that bullish outlook happen? Okay, let's take a look at this hourly. Let me drag Fibonacci retracements from our chart. And we're actually around 38.2 Fib retracement. So given how the dailies look for me, it looks like it's trying to generate some mean reversion. I would go look for a potential buy in dollar CAD later, not right now. Allow this chart to pull back. As we said, for the moment, things are bad for the dollar. You have a nice Fibonacci. You know how nice this 3661 level is? If you look at the price chart, even before that Fibonacci was drawn, even before that Fibonacci turned up in your charts, you had a consolidation floor around 3661, and that makes it, this thing here makes that price level a good area to consider going long. Now, folks, if you attended our webinar on developing EAs last Wednesday, then you should have access to code already. If you haven't attended that webinar, please just search for the video in our channel, because we posted there the source code of an EA, or rather of a CBOT. So okay, if you're using MetaTrader, I'm sorry, it's not gonna work for you. Maybe perhaps later we're going to do a MetaTrader version of that robot. But if you have CTrader, you might want to use that source code, compile it in CTrader, because that EA, what it will do is it will allow you to make a conditional buy entry for your dollar CAD. Meaning, yes, we like 3661. We have a Fibonacci level there, 61.8 Fib. That used to be a consolidation low. So that's a good price. But I want there to be a confluence of excuses or reasons. Okay, excuses is such a connotes has such a very negative meaning. We want a confluence of reasons on why we should be buying at 3661. And to me, that confluence of reasons would be well supported. And then if you give me a hammer or a dragonfly doji that extends from that 61.8 Fib level, then sure, that's something that I would be willing to buy into already. But for the moment, our immediate risk appears to be for prices to ease lower. So, guys, we don't have any important data from Canada later. At some point, all that violence that's happening in the US will stop. And once that's done, once that's over, maybe later, we could expect a bit of a bounce in your USD CAD. Again, we prefer that bounce to come from that 61.8 fib retracement level. So it's not there for now, but again, if you want a more sophisticated way of doing it, let me just show it. Let me just show you where you can find this. So from the channel, just find this video, how to create a candlestick limit order price action. And if you go there, you're going to see this. I posted in the comments the actual source code. So if you're a CTrader user, just copy it like this. And then you go to the CTrader platform. You go click on that algo, and then you create a new one. Okay. Put in the name that you want for the algo there. And once that's done, you can use it. Okay, you just have to click on the play button for that algo for you to be able to have access to the algo. Okay, so yeah, you just go to the code editor, guys, copy paste it there, click on build, and you now have the algo. You can now use it in your trading. Okay. All right, let me get back to our overview. Let's see what the big picture is again. Where else should we be going? Let me see. I actually don't like, once you're trading for yourself, I actually do not suggest that you go all over the charts, all over the different instruments, and then trade and trade and trade and trade. I actually suggest to people that you focus on an instrument, get to know how it works, the ins and outs. And once you have a good grasp of how that works, then that's the only time when, or that should be, or you should focus on just trading that particular instrument. Okay, but to each his own. I just think though that it would be a good idea for you to just concentrate on something and not be scattered across all the markets. All right, let's take a look at GBP. What do we know about the UK? Anything important this week? Let's see. So Thursday you have GDP from the UK. While GDP is an important number, they normally come out very accurate, that people do not need to respond, people do not need to factor in what the numbers are. So I guess that as far as GBP/USD is concerned, it will be about charts, it will be about what's going on in the US, and of course we have a lot of data coming from the US later in the week. Okay, and Wednesday you have your most important data for the week, I guess, your CPI data. But that's Wednesday. Today's Monday. So what can we do today? Let me check ATR again. Of course, if you're a scalper, I think ATR is not something that you should be checking, or you actually need to check on a daily basis. But I actually prefer trying to catch the swing for the day. So yeah. All right. Average true range is at 90. So we have 90 pips to look for today, or rather ATR. We have 90 pips, a 90 pip allowance. Now intraday, what do we have? Big picture, guys, is that you are at these highs in GBP, highs that haven't been seen in almost 5 years. Last time you were in this area was all the way back to 2022. Okay, it's about 3 years. So the big question for people is, can we continue that push? Can we see another higher high this week? All right, let me take a look at this. So daily level, we have higher highs, higher lows. This thing here looks very much like this here, which means what? Which means that maybe it's not a good price for you to be jumping in long right now. But let's see. Let me go lower time frame. So as we said, we have 91 pips available before we hit average true range. Okay, hourly chart. Let me drag some Fibonacci's. All right, so I guess I'm not too keen about buying your GBP anymore. We're pretty near the 61.8 Fib retracement of that sell-off from Wednesday's highs. Yeah, let me see this again. So 90 pip average true range, high is at 35.72, low is at 35.20. Okay, from that perspective, you actually have a little room to maneuver. Okay. All right. So here's what we do. Since overall trend is bullish, but we're also near 61.8 Fib retracement, I think the better course of action would be for people to be patient. On your upswing, drag some retracements and then see if you can get prices to pull back to 61.8 Fib. That's around, okay, let me just get the price for that. That's about 35.32. So my preference here is actually to try to get hammers and again dragonfly dojis from this area, or these kinds of candles reaching all the way down to these levels. And if I see those, that's the only time that I will consider going long, joining the buy side of GBP. So we're bullish, but we tend to think really near the highs. We tend to think give us a bit of a pullback before taking action. Audio, so we really don't have a lot to talk about today, so I guess we'll just cut things short. Again, overall trend right now is for dollar weakness given the what's happening in the US at this point, given all the violence that's happening in LA. For now, I would say look for those pullbacks before taking the buy side of your euros, your GUs, your gold chart. All right, folks. So thanks for joining us, and I'll see you on Wednesday when we will have a more active trading day for us with us.